Okay, so I'm giving you a freebie lesson on a lot of things here. So we're gonna take a look at what are the actual data. You see here, Bob, he's a W-2 earner, works at Chase, $250,000. He is single, and he decided to buy a short-term rental in California for $500,000. Now, these are all for numbers. Don't come for me if you're like, that's not exact. Okay, this is just for you guys to understand how it works. He gets a cost segregation done, and they tell him he's going to have, after all expenses, he has a really nice profit and loss statement of $116,000. So let's take a look at how his taxes would go if he didn't have this. No short-term rental on this side, W-2 of $250,000, a standard deduction of $12,950. That's all the deductions he really gets. As a W-2 earner, you guys, if you go watch my videos about LLCs, you will know that they have very little deductions. So his taxable income is $237,050. So here's a really brief overview of how it's gonna look like, how taxes are actually calculated. It's a freebie. So essentially, we're going to take a look at the tax brackets. I will put them here. The tax brackets is what's going to tell you how you're going to be taxed. So on 237, you're going to look at the tax bracket for single, and we are going to look at the number that says between 170 and 215. So your first bracket is you're going to be taxed $34,648. Anything above 170, $050. So 237 minus 170, $050, which is $67K, will be taxed at 32%. So times 32%, that's $21,000. Your total tax is going to be $56,000 if he makes $250, has no deductions, no cost segregation. That's what his taxes are going to be. Now, whether he withheld them or not, that's a different story. We are talking about how much he actually will owe at the end of the year. Of course, if he will withheld enough, well, that's going to make a difference. So now let's go to what happens if he gets a short-term rental and he uses the short-term rental loophole. So with the short-term rental loophole, it's kind of the same thing. We have the W-2 at $250, but we have a loss of $116,000. The standard deduction of $12,950. So we are looking at his taxable income of $121,050. We look at the tax bracket that I told you, we are looking now at the 25%. So his tax is $15,213, and anything above $89,075 minus $89,075, that's $31,975 times 24%. That's $76,744 plus $15,213, so $23K minus $55,000. There is a difference of $32,000 just by doing the cost segregation. So that's the example. Hopefully this helped. Make sure you subscribe to my channel. Bye. Play the game, people.